Welcome back. Now, Famous Brands has delivered a strong first half performance supported by stronger domestic demand and operational efficiencies. The branded food services franchisor says sustained consumer preference for its local leading brands portfolio led to robust revenue growth, lifting the performance of its manufacturing and logistics divisions. Famous Brands CEO Darren Hele joins us now for further insight of that performance. Thank you so much for your time, Darren. Quite an interesting time to be releasing such a strong number. So just characterize the level of growth that you saw in this period as the economy and consumers grappled with lingering risks.
Evening, Zanati. Thank you, and thanks to your viewers for the opportunity. Yeah, I mean, it's been an interesting period. I mean, we've seen growth coming through in a slightly lower inflation environment, so we're comfortable with that growth. We're probably not eking out as much as we would have liked. There was definitely some up and down in the period, but there's definitely green shoots from a consumer perspective. People getting out and about a bit more mobility, which is encouraging for us. So particularly at the front end of the business with our leading brands, both in the casual dining and quick service restaurant space, we're seeing some positive growth coming through. It's not easy, but definitely kind of a little bit easier than we have been in the last couple of years. I think that a little bit of respite on interest rates, a little bit of good news, people holding together, petrol price coming down, particularly in our industry, helps. Has really just given the consumer a little bit of buoyancy.
All right. I mean, looking at your brands, I would say that you cater to all consumer income segments. You have your quick service restaurants, casual dining restaurants to signature restaurants. I'm just wondering, within this kind of environment, have there been any shifts in demand as you gauge the consumer pocket, where consumers are flocking to specific types of restaurants and pulling back from others?
Yeah, look, the general insights are, daytime trading does seem to be slightly better, and we are finding it more challenging in the higher spend businesses. I mean, of course, it's highly competitive too, so there are competitors in that space. But as a general rule of thumb, we're finding the higher spend eat-out restaurants getting a little bit more pressure, and that's really around, I suppose, people celebrating occasions, less corporate spend in the particular market. So I'd say there's definitely a standout there, and then generally less traffic through major shopping centres from what we can see. So which kind of makes sense if you think of your everyday life. You've got less reason to visit there. The big box retailers have got convenience offerings closer to you. Banking is not like it used to be. Lot less need to go into a bank. So as those centres transition to live, work, play type centres, we're going to have to kind of bite the bullet a bit on that. So generally, that's where we're feeling some challenge. But I think generally across the board, the mid-tier well-priced offerings are all doing well. Not just ourselves, but we clearly see the competitors also getting their slice of the action.
Yeah. Some interesting aspects that I found in your results commentary in terms of the competition for consumer spend. Those are quite fascinating. Famous Brands was the first restaurant company that I saw flagging the impact that gambling is having on consumer spend and priorities. How much of a dent is that creating in terms of the strain it's putting on restaurant spending?
Yeah, look, putting a number to it is quite difficult because it's growing at such a rapid rate, and every time you put a number down, another one comes up. But we don't just pick it up in spend; we're picking it up in research, and I think you can look at some of the bank data that gets shared. The cost depends on what you spend on gambling. It's not difficult to spend $25 on something. That's kind of entry level in our category. So you could have 2 ice creams. And a little bit on top with that. So people make those choices. We're seeing it, particularly on weekend spend. People will decide to either invest it in having a great time, or maybe gambling and having an even better time if they win. If they don't, then that's the chance that they took. But you could just see it whenever you travel around South Africa. The amount of money that's been spent in advertising, because that's where we compete too, is for advertising space. And it gets quite crowded out from that category, and it must be being funded from revenue. So it is interesting. It's definitely impinging on the lower end in terms of that, and I'm sure there's many other categories too that are feeling it. It's a choice that you make, and yes, you may win we'll get some out of it, but I think we always know that we're the odds are favoured.
Darren, another aspect of competition comes from the rapid delivery offerings of the supermarket retailers. What's Famous Brands' approach to this structural shift?
Well, we have a solid footprint in delivery and we're not giving it up, so we continue to focus and service the consumer and give them the right offering. But, it's just another offering that they have. So, I use the analogy, if you're having a quick braai before, you may have just, ordered in pizza, quite convenient. Now it's probably just as convenient to get the groceries in. So it's another competitor. I mean, they obviously are competing with themselves. And we just have to be, as good, make sure that we meet the time that we commit to, we meet the quality, we meet the value and the pricing as we have to. That's all you can do. We've never given up our delivery platform, and we continue to invest in it, and we continue to do a good job on the delivery platform. But you can never stop consumers having choices, and technology is an enabler, and that's what it does. It gives people choices. But I'm happy to report that we're in the game, not just with outsourced aggregator platforms, which is different, with our actual own platform, and we compete on the streets. So it's something we're not planning to give up, and we never have.
We'll talk about, technology being an enabler, because this delivery service landscape is an element of digital advancement in the consumer space. Has your level of investment into technological capability shifted?
Definitely. We continue to invest. It is quite challenging. Sometimes it is a grudge purchase, but you have to keep investing. So we are doing quite a lot of that, which we hadn't done historically. So it's new to the business around getting your head around that. We're quite good at buying trucks in distribution or forklifts. We're good at that. But when you've got to buy or build some software, it starts to become more challenging. But we have more and more definitely investing. We invested in a POS platform about 24 months ago, and that's gone well. And really using that as a platform to rebuild the base from. So, but again, it was an investment, and it's required more capex that's gone into that as well.
Darren, just lastly, as we wrap up the conversation, I think we have less than a minute. You're looking at expansion in regions outside of South Africa, but you are cautious. What will characterize the investments that you do make there?
Yeah, very, very cautious, and we're looking at preferably licensed models. Secondly, franchise, and then thirdly would be company owned, which is where investment would come. So more than likely around the licensed franchise model, which is capital light and shared risk. So that's kind of where our headspace is at. And it is becoming more challenging in various markets. Just as South Africa's felt the pressure, many of our counterpart countries in Africa are feeling it, the same way. They're also getting the kind of headwinds, particularly with geopolitics. So we are very, very cautious at this stage. We opened one store in Cote d'Ivoire in the reporting period, which I think reflects how conservative we've approached it.
All right. Well, we do have to close off the conversation there, but thank you so much for unpacking the half year that was Darren. That was Darren Hele, CEO of Famous Brands.